The natural gas market experienced a slight pullback early Tuesday, potentially due to overexcitement. This price fluctuation coincides with shifts in production levels, storage data, and weather forecasts affecting the energy sector. Mostly light national demand is expected for the 8 to 15-day period as the northern part of the U.S. experienced comfortable highs of 60s to lower 80s, while the southern part of the U.S. is warm to locally hot with highs of mid-70s to 90s besides locally hotter 100 southwest deserts. Recent reports show a modest drop in gas production across the U.S., averaging 97.2 billion cubic feet per day in May compared to 98.1 in April. Despite a temporary increase from maintenance completion on Texas gas pipelines, overall production in 2024 remains approximately 8% lower than the previous year. Meanwhile, the Freeport LNG plant is producing LNG at the highest level in 6 months after a prolonged period of unforeseen outages and maintenance. Currently, the 3 production trains are jointly producing 2.09 billion cubic feet per day. Moreover, traders' recent transition from net short to net long positions, as per the U.S. Commodity Futures Trading Commission, signals a bullish sentiment fueled by expanded LNG export capacity and slight demand upticks. However, significant oversupply and storage may restrain price growth. Expect short-term volatility with a cautiously optimistic outlook, shaped by domestic production shifts and international demand for U.S. LNG exports. Markets are already bracing for the Consumer Price Index for April, which is set to be released on Wednesday, so any words from Fed Chairman Powell on possibly keeping rates higher for longer might influence the initial Fed rate cut prospects to later 2024 or even earlier 2025. The outcome of that scenario would be a stronger U.S. dollar across the board, weighing on gas prices denominated in USD. The rally in nat gas trading since the end of April is losing momentum. It has reached a critical point and encountered strong resistance against the 200-day moving average at $2.40 on Tuesday. A significant catalyst or driver will be necessary to surpass this resistance level. If the gas price breaks above the 200-day moving average, the $2.50 mark becomes the initial level of interest. Beyond that, attention will turn to the pivotal zone near $2.65, which would establish a new high for 2024. Further upward movement could see a swift move toward the $3 mark. On the downside, nat gas is well supported by the 50-day moving average at $2. The shift from short to long by traders is important because any rally will now be driven by fresh buyers rather than short covering. This is a bullish development. Thank you for watching. Please like and comment to support the channel. See you in the next one.